We'll draw attention again to how to define the trade swing. The trade swing usually shows on all the charts that we'll be looking at. There is, let's say, the bi-weekly to monthly projection over here. It will be showing on the daily chart. It's doing a cycle 3 and will take the market to 1.11. On the 4-hour time frame, you are looking at taking profits within the week or usually a 2-week duration. It is an internal cycle 3 and it is probably taking the market to 110. You're looking at the daily time frame, the one that we could trade on a 24-hour basis or 1.5 days, 36-hour basis. It usually shows on the 15-minute charts or the 30-minute charts. We are actually doing here something like a cycle 5 or C.5. Is will be taking the market from current levels to 1.0930 or 1.0945. We'll be looking at all, of course, as we proceed with the analysis. We're looking at today's daily chart. The cycle is again defined. This is going to be cycle C. The relevance of this cycle C is that it relates to this cycle B here in red. So we're looking at the same triggers almost. Both triggers are at the 200-point moving average. I'm referring to this green arrow here. Bounce out of the 200-point moving average was really a corrective cycle B, but it was just a shoulder level. We'll look very shortly at why this B could be equal to the coming C. We have the same trigger again today. This is going to unfold in the cycles C, and the cycle C must have 5 swings. Usually it is going to be 3 swings, and the last leg 3 must have 5 internals. So I'm showing here an A and a B in white. We're showing a 1 and a 2. 3 has already broken out, and that 3 is going to be doing an internal 1 and a 2, 3, 4, and a 5. Ends at around 111. Maybe higher, 112. It's that cycle C, which we're going to monitor on a daily basis as we get more histogram bars arranged so that it becomes something like this. All right, both triggers. Today's trigger supports the market above the 200-point moving average. It's a very important trigger. You see support here at the level 1 and above the 200-point moving average. So the market is a goal in terms of a position trade. Let's take a look at the cycle structure. How far is that position trade going? So, of course, we see heads and shoulders, but they're really cycles, nothing more. There is the head cycle and the shoulder cycles. If I have a bounce right now, this is the same on our 1-day chart or daily chart. If I have a bounce out of a level 1, then you're definitely going to take out the shoulder cycles. We're very close to the shoulder cycles. And if you're seeing good positive momentum on the intermediate term charts, then we are going 50% between the cycle bottom and the cycle top. We take out the shoulder cycle. The most probable target is really 111. It's just like range trading. That's all. Overall, we have bounced, of course, a high degree level. So definitely we take out the shoulder cycle. Most probable target again is 111. Let's take it now to actual trading. We're looking at this forward chart since last week. This just reminds us that we finished the leg B, definitely bounced out of level 1. We're showing an A and a B. This is a structure that we're going to be segregating moving forward. This is today's 4 hours. We have defined now the cycle that we're trading as a cycle 3. This is definitely a continuation because the momentum indentation is higher than a cycle 2. So let's go over the labels. We have a 1 and a 2 at that point, very high up. We have an internal 1 and a 2. We have a 3. We have finished 4. Indentation here is lower than an indentation 2. Refer to the arrows, of course, the green arrows showing. And therefore we're doing 5, and that 5 takes us to probably the top of that level 3. Remember that target that we had on our own define the trade swing at 1.0945. Over here showing 1.0938, 1.0956, and finally 1.099 or 110. All this inside of wave 5, possible targets for wave 5, high degree wave 3, and it's that cycle that we're trading. This means that on this 4-hour chart, whatever we see in terms of momentum unfolding on the 1 hour and on the 15 minutes, the 4-hour momentum histogram must never fall below 0 if we're going to be doing the wave 5. We'll probably always linger at overbought, slightly below, slightly above, until we get one of these targets and then retract to do shoulders. We believe the pattern structure has supported breakout of a leading diagonal. This is again today's 4 hours. You see a very clear leading diagonal and dotted yellow. And the support is very close, of course, to the leading diagonal. The support is also right now forming a tweezer. We have a tweezer formation, at least at the first level. Should continue higher, and by the time it does continue higher, it will probably break to 1.09 and 1.094, right? So we believe the market will attack the neckline higher, 1.095, 1.096, before it retracts to the shoulder levels that's showing here on the left to redo it on the right. So our trade really should target 1.096 and 1.0945 on a weekly to bi-weekly basis. This is just to remind us that after doing that level 1.010 or 1.0945, we get a retraction to those shoulder levels, and what you're seeing as a double head and shoulders, your double heads and shoulders, becomes really heads and shoulders, inverted heads and shoulders. We will just look at the parts, 30-minute charts from last week to update what we're seeing today. That's all. But the labels are all the same. There is no difference. We'll look at them. Nothing really has changed. We will look at them on the last 30-minute chart. So the market has been doing shoulder levels. This is an inverted head and shoulders. Remember, the support was expected at the upper boundary of the leading diagonal since early last week. Since when the market was at 1.0867 or 1.087, the market retracted, did I believe 1.08 and 1.079, that the shoulder levels. We got that retraction last Friday, and the labels now stood out correct. I'm focusing on this 1 and 2, 3. That was a correction 4, and now we're doing a 5. It shows here as a 1 and a 2, dot 1, dot 2, dot 3. That really was a dot 4. We're doing now a dot 5 inside of that high degree 3. The rounding bottom came in last Friday, I believe. That's what we have right now today when we go live. So we're going to be trading dot 5. Dot 5 on last week's 30 minutes, showing there, round up a high degree 3. Now shows on today's 15 minutes. We were having at that point good positive momentum. It's going to be splattered because we are moving inside of an ending diagonal. This clearly shows a 5 at that point. We do the internal segregations when we go live, but we know we have done a level 4 because there's a momentum intention lower than level 2. We can see a mast and a ledge. We have a tweezer formation. I believe the markets will just charm until we have a weaker dollar and break higher. So we always want to buy around 61.8, showing here. This is, of course, the higher degree structure. At the most, it's really towards the moving average. We're seeing, of course, inverted head and shoulders. We segregate this on the 15 minutes. Buy. We have a hedge below dot 4. We're going to 1.0930, 1.0945. These are the targets that we're showing on our defining the swing projections. Bear with us a second. Targets that we're showing here, 1.0930, 1.0945. Of course, if we are trading longing sterling dollar, then we stand out of euro dollar. It's either one or the other. Trading both at the same time would just mean that we are aggravating risk. All right, let's do the labels. Bear with us a few seconds. Bear with us a few moments. All right, I believe we have the correct segregation. We think we should have, therefore we will interpret the structure that we're seeing as a bullish breakout. So we believe we are having a motive wave, a complete motive leg. It's doing a 1 and a 2, 3, 4, and a 5 at that point. It's just a high degree wave 1, and then we get high degree wave 2 and high degree wave 3. All right, so we're getting a correction to A, to B, and to C. Let's take this now to 15 minutes just to check the shoulders. So on this 15-minute chart, you can see that the maximum depth of the shoulder levels is at 1.0839, 1.0840, 1.0839 is showing here. So the right now market is 1.0858. We have splatter momentum on both 5, I believe, and 15. We check the 5 again, so we may attack the moving average. We can attack 50%. All right, so bear with us a second. Yes, splatter momentum on the 5 and 15. We have a very strong spike on the 5 minutes, but we have negative momentum after that spike, so it just counts that we've broken out of the wedge, that's all. So if you wish to take the entry, I believe we are going to get 50%. I believe we're going to get 38.2%. I believe we can get an entry at 1.0830. I believe we can get an entry at 1.0840. We're going to be taking this to 1.0940, just 100 points higher. The volatility, I don't believe, is going to be very strong. It may actually be quite weak. And we are going to have a hedge below .4 altogether, close to .1. So this is going to be the hedge to protect at 1.078. So the market is an entry at 1.0830. The market is an entry also at 1.0840. The hedge is 1.078. If you wish to take it to 1.077, that's also possible. 1.0775 or 1.077 would mean that we have something like 70 points of risk. Target is 100 points higher at 1.094. Right, so let's take it to hourly, 4 hours to check targets. Shows is quite vibrant here on the 4 hours, and the target is 1.0924, 1.093. Of course, 1.0965 is resistance 3, but resistance shows 1.093. We can clearly see some kind of a wedge and a breakout higher, so we are not going to get 1.0830. We might as well buy market. We have a tweezer formation. So if we want to make good money on this, we'll have to go on size because the target is only 100 points higher. So let's say we use 3/4 of a standard is $750. All right, and I believe the real risk is not to fall below the tweezer, 1.08. That's it. So the entry is 1.086. The hedge is 1.0860 points. A standard would cost $600. 3/4 of a standard, $450 of risk. And the target, of course, is 1.094. I believe for 3/4 of a standard. This is 80 points, meaning less than $800, around $600. There is, of course, possibility also that we break higher because we know that the ultimate target, if we care to hold across the end of the week, ultimate target can be 110, really. So 110, if we're quite close to 110, and 110 is really the ultimate target. We will be at 1.0830. 110 is just 70 points higher. So at 110 from entry at 1.086 means you're looking at 140 points. This makes it a worthwhile trade in terms of econometrics to do. It's always, again, like I was saying earlier, very important, even more important than doing the right entry, to know what we're getting into, to know what we expect, or what is not to have very high expectations, but to know in a very pragmatic, sensible, and down to earth manner how much money we can realistically make out of the trade, so that we amend our entry, we amend our size, we amend our stops so that they become acceptable to our psychology. And at the end of the week, we find that the money that we have actually worked for, projected, is there. Is if it was really a realistic projection, it should be there. It should be correct, because we could do the whole trade, and if we are not on good size, not on good gear, if we have not projected the right targets, we will not really have made the right equity or the usable equity. So we need to go on size, again, about 3/4 of a standard. We will need to hold until 110. This is probably 2 to 3 weeks duration for the trade. It's a position trade then for something like 3 weeks. And when we buy market, I believe we're not going to get a correction because we have a tweezer, and we are going to have raised the hedge. It's a hedge and not a stop. Raise the hedge to 1.08.